All right, hello everyone, and welcome to One Stop Business Workshop. If you're joining us live, thank you so much for your patience while we deal with some technical difficulties behind the scenes. Mondays, am I right? Anyway, so I'm your moderator, Diana Chu. I'm a compliance officer at CAVCO, and if you don't know what CAVCO stands for, no worries, you will by the end of this presentation. Before we begin, we wish to acknowledge those Indigenous nations whose land we live and work on. We are gathering online from all across the country, and since land acknowledgements are specific to each region, we encourage you to visit the Native Land digital website to identify the First Nations territories on which you are located. This session is being presented to you from unceded territory of the Algonquin Anishinaabe Nation. Your presenter today is my colleague Hiba, who will be giving a high-level overview of the federal tax credit programs available for the film and television industry. Hiba is a senior tax credit officer who has worked at CAVCO for 13 years. I've had the pleasure of presenting with Hiba in the past, and let me tell you, not only is she knowledgeable, but she can explain something as daunting as tax credit in a very clear manner. So I'm very grateful that she is here with us today to present for us. Now, this 30-minute presentation, I know we started late, but we'll still have the full 30-minute presentation or session. We'll begin with Hiba's presentation, followed by some Q&A, during which I'll be asking her questions that were provided during registration. You can also email me your questions during the session at the email address in the invite. Now, you will see that there is a lot of information in the presentation, but do not worry, a copy of the presentation will be made available afterwards. And with that, let's begin. Over to you, Hiba.
Thank you, Diana. Hello, everyone, and thank you for joining this session today. Due to the limited time constraints, we'll not be able to go in depth with regards to each topic, but please keep in mind that the presentation that we are giving today, the slides, will be available online, and there will be a lot more detail on each slide, more than I will be able to cover. As well as at the end of each slide on the bottom, there is a link to our guidelines for more information. So please do consult those. Before I begin, we do know and we understand that the process may be a little overwhelming, especially for first timers or emerging producers. But please do keep in mind that we are here to help. Please reach out to us, whether it's questions about our guidelines or about the online system, and we will do our very best to guide you through it. Next slide. So we'll begin with the million-dollar question. What is a tax credit? So a tax credit is an amount of money that can be used to reduce taxes owed. So we are the federal tax credit program, but not every province, but there are provincial tax credits as well. And some provinces do not offer tax credits, but they offer different forms of funding like grants. Next slide. To apply for the federal tax credit program, you will be submitting an application with the Department of Canadian Heritage, namely our office, the Canadian Audiovisual Certification Office, better known as CAVCO. CAVCO, along with the Canada Revenue Agency, co-administers 2 federal tax credit programs for the film and television industry, the CPTC and the PSDC. The first tax credit we'll be covering is the CPTC, the Canadian Film or Video Production Tax Credit. It is a refundable tax credit worth 25% of the qualified labor expenditure for an eligible production. Applicants must be Canadian production companies. So to reiterate, this is the tax credit that is available for domestic companies. The second tax credit, the PSDC, the Film or Video Production Services Tax Credit, is a refundable tax credit worth 16% of the qualified Canadian labor expenditure for an eligible production. The PSTC was created to be used by service production companies. However, it can also be used by domestic production companies if the CPTC requirements are not all met. Next slide. So now we will be covering the eligibility requirements for the CPTC. First, production companies must be applying for 2 certificates. The first certificate is the Part A production certificate, and the second certificate is the Part B certificate of completion. It's important to note here that the Part A certificate on its own does unlock the tax credit with the CRA. However, it is also a requirement to apply for the Part B certificate of completion. Failure to apply for the Part B certificate of completion will result in the revocation of the Part A certificate. It's also important to note here that there is no deadline to apply for the Part A certificate. However, there is a deadline, or there are deadlines to apply for the Part B certificate. The deadlines are determined according to the commencement of principal photography date, as well as the corporation taxation year end. If anyone needs a clarification or perhaps an example of how those dates are determined, you can ask, you can email the moderator, and I can give you an example of that. Next slide. The production company must be a prescribed taxable corporation and a qualified corporation. Now, in order to be a qualified corporation, first, a production must be incorporated. And second, the production must be primarily in the business of producing film and television productions. Now, when we say, I would like to highlight primarily here, if a production engages in other activities, we would recommend the incorporation of a one-off in order to avoid being disqualified. We have seen some confusion in the past where a production later may not be determined to have been primarily in the business of producing films, and that could cause disqualification. Next slide, please. So this slide is pretty straightforward. Only the production company or a prescribed person may own copyright in the production, and it must be demonstrated that the production company owns copyright for at least 25 years. Next slide. Production genres. So our list is in the negative. You're either, if you're not, so you're eligible unless you are ineligible, basically. Everything is eligible unless it is not. The ineligible genres are generally content that would not be supported by public funds, such as advertising or pornography. Next slide. So key creatives and producer-related personnel. It's important to note that tomorrow my colleague, Katia Preto, will be giving a presentation, and she will go in depth with regards to key creatives and producer-related personnel. An overview that I will give you today is basically, in order to be eligible for the CPTC, a production must receive a minimum of 6 out of 10 points for key creatives, and all producer-related personnel must be Canadian, with the exception of those receiving exemptions. Next slide. So with respect to Canadian costs, we do have a Canadian cost threshold of at least 75% of production costs. So production costs, at least 75% must be Canadian, and at least 75% of post-production costs must be incurred in Canada. These costs are determined using our breakdown of costs form, which is a requirement with the Part B application. And actually, this form has now been incorporated within the application itself. Next slide. Exploitation. A few key things to know about exploitation. First and foremost, the Canadian production company must be able to demonstrate that they are in initial control of exploitation of the production. Second point to consider, and it's very important, there must be a written commitment from a CRTC licensed broadcaster or Canadian distributor to show the production in Canada within the 2-year period from when the production is completed. It's important to note here, and there is a bit of confusion about this. If you have any questions, please do ask, but I will try my best to clarify. If the production is an online-only production, or if an online exhibitor is being used to satisfy the 2-year commitment, that is okay, as long as the next 2 requirements are also satisfied. So first and foremost, the online exhibitor must be on the list of acceptable online services available on our website. That website is always being updated, so please reference it. And the second point, which may be a bit confusing, but is actually simple. So the online exhibitor can be used to satisfy the 2-year clause as long as their rights were secured through a Canadian distributor, which means you cannot use a non-Canadian distributor as an intermediary between the production company and the online exhibitor. So basically, rights begin with production company, rights are passed on to the Canadian distribution company, and then the Canadian distribution company can sign rights with an online exhibitor, and the 2-year clause can be satisfied. The 2-year commitment can be satisfied in this way. Next slide. With regards to distribution, 2 main points to consider. First, a distribution cannot be made in Canada by a non-Canadian entity within the first 2 years from when the production is completed. And second, the Canadian production company must be able to demonstrate that they are retaining an acceptable share of revenues, which would be at least 25% of net receipts. Next slide. Now we will move on to the PSTC, and we will cover the eligibility requirements. So first things first, the PSTC application must be submitted by the copyright owner or by someone they designate to apply on their behalf. With the PSTC, there is only one certificate. Next slide. Production cost minimums. So with the CPTC, there is no minimum cost requirement. However, for the PSTC, there are minimum cost requirements. If the production is a one-off, the minimum cost requirement would be 1 million Canadian dollars. For a series or for a pilot of a series, if the episode has a running time of less than 30 minutes, the minimum cost would be $100,000 per episode. And if the episode has a running time of more than 30 minutes, the minimum cost would be $200,000 in order to be eligible. Next slide. Once again, with the ineligible genres. So again, we have a list of ineligible genres, very similar to the CPTC. The main difference here would be that talk shows remain ineligible under the PSTC. Next slide. To apply for the CPTC or the PSTC, you must submit an online application, which can be found on our website at www.canada.ca/CAVCO. Please keep in mind that applicants may be requested to provide additional information following a review of your application by CAVCO. If your application meets all of the eligibility requirements, a certificate will be issued electronically. Next slide. Following the issue of certificates, the certificate can be used to claim the tax credits with the CRA. Once again, as I noted earlier, the part for the CPTC, the Part A certificate does in fact unlock the tax credit. However, it is a requirement to apply for the Part B certificate. And that would end of my presentation.
All right.
Over to you, Diana.
Thank you so much, Hiba. Thank you very much for that high-level overview of the CPTC and PSTC. So now this is where we'll start the Q&A portion of the session. Just a reminder to everyone, if you have any questions, you can email me at the address in your invitation. I already see that we have some flowing in, but we'll start from one that we received during registration. So what are some easy or common ways someone could disqualify themselves from tax credits during production? Can you talk to us about that?
Sure. So there are many common ways that we see. For example, missing application deadlines. As I mentioned earlier, the Part B certificate has application deadlines. Minimum CanCon points not met. I didn't go into this, but it isn't just minimum CanCon points. So the production will have to receive 6 out of 10 points. However, there are also the lead performer or the second lead, one of them has to be Canadian. Sometimes we see that there is only one non-Canadian lead on a production. This will disqualify the production. 75% non-Canadian costs or Canadian costs not met. So if the production exceeds more than 25% of non-Canadian costs, that can disqualify or definitely will disqualify the production. Ineligible genres, a main one that we see is advertising. That part is a little bit confusing. So many times productions are disqualified for that. Let's see, corporation is not a qualified corporation. So either the production company was not incorporated or the production company was not primarily in the business of producing film and television productions. Not having a CRTC licensed broadcaster or Canadian distributor on the production. So once again, it is important that if the production is being shown online, that is being secured through a Canadian distributor, or that there is also a CRTC licensed broadcaster on the production. Another point would be distribution in Canada by a non-Canadian entity within the first 2 years. So we also see that often, and many times the non-Canadian rights can begin after the 2-year period, and then the production would not be disqualified.
Okay. I guess I'll do a little plug here. Yeah, you mentioned earlier about the genre can be a little bit confusing. In the presentation, and on each of our slides, we do have, you'll notice references, you'll have references to the application guidelines, and there'll be clearer information for you there as well. There's also information about a pre-assessment program. So sometimes if you're not sure, if you read the definition and you think the definition of an ineligible genre and you think that maybe your production could fall under it, you can also use our pre-assessment service to sort of get a preliminary opinion to see if that is the case. All right, so second question we have here. You mentioned earlier that at least 75% of production costs must be Canadian. Many documentaries use stock footage, and due to consolidation, most are owned by US or foreign companies. Would CAVCO consider special dispensation for doc producers as it relates to stock footage and the 25% non-Canadian cost for production?
The answer is no, and it is actually a requirement in the income tax regulation that the costs, the non-Canadian costs, do not exceed 25%. And as I said in my presentation, that is determined through the breakdown of costs form. Actually, stock footage is specifically on line 67B of the breakdown of costs form. So unfortunately, there's no way around this one.
Okay. All right, well, thanks for asking anyways. Next question, do you have a list of festivals where shorts can be shown that would qualify for the tax credits? Can you maybe explain that a little bit?
Okay, so we do not have a list of festivals. However, this is similar to the online only or the online exhibitor point that I covered earlier. So in order for a production to be shown in a festival, and if that is going to be used to satisfy the commitment to have the production shown in Canada, that is fine as long as those rights are secured through a Canadian distribution company. Again, you must absolutely have a Canadian distribution company in between the production company and the festival rights. Otherwise, if the production company secures the rights with the festival, without that Canadian distribution company in the middle, the production would be ineligible.
Okay, thank you. Let's see. So I'm going to read this one verbatim, but it might be one of those questions we might have to follow up with, but we'll see. Regarding related party transactions, are those only the transactions that are paid to shareholders of a single purpose company and the parent company? Or do related party transactions also include any amount paid to an individual with a producer related title? For example, producers, co-producers, executive producers, etc.
I believe that I'm not sure I quite understand the question, but yes, like it would have to, like related party transactions would have to be somebody who is related to the production company. So per se producers, co-producers. But I feel like maybe we should follow up with this one afterwards, just to make sure that we're clear on what they're asking.
Sounds good. Let's see. Oh, this one's interesting. How many days are you allowed to shoot outside of Canada for documentary or unscripted production?
So we don't have a limit on how many days you shoot, as long as you keep in mind that you are not going over the 25% non-Canadian cost threshold. I'd like to note here, actually, the breakdown of costs form is a requirement with the Part B application. However, if you submit a Part A application, and myself as an analyst, and I'm looking through your application, and I notice that you have a lot of shooting days outside of Canada, I will most likely, and any other analyst may request a breakdown of costs form to be filled in at the Part A stage, just so we can make sure you are not going over that 25% non-Canadian costs threshold.
Okay, very good. Okay, so earlier you had mentioned that if somebody wants an example of deadlines for Part B certificates, to let me know. So we've got a taker. So do you mind?
I don't mind. I was hoping no one would ask, but I'm gonna write down for myself. So let's say the commencement of principal photography date is September 1st, 2019, and the taxation year end is September 30th. So what we'll do is we'll use the first date, the first taxation year end date following the principal photography. So principal photography, September 1st. The first taxation year end date following principal photography will be September 30th, 2019. This is our golden date here. We will be using this date to calculate or to determine your deadlines. So 24 months after this date would be 2021, September 30, 2021, that would be the 24-month deadline by which the Part B application must be submitted. If it is not submitted by that date, you can submit it up until the 42 months deadline. However, you would have to file waivers with the CRA. The Part B certificate must be issued by the 48 months deadline. So you have 48 months to have the production actually certified, not for you to submit afterwards. So again, our golden date here would be September 30th, 2019, the first fiscal year end date following principal photography. And from that date, we would calculate your 24 months deadline and then your 48 months deadline. I hope that was clear.
And the 42-month deadline also.
And the 42-month deadline.
Yes, perfect. Okay, now, well, this might be a follow-up also, but we'll see what you think. Are there examples of completed applications that newcomers can see to help understand the application?
No.
No, and I think there would be privacy issues with that.
Yes, that's definitely taxpayer information. However, we are very helpful. We're here to help. Please reach out to us if you have any questions. And also, like, throughout the process, once we receive an application, I mean, I've seen so many producers who are first timers and they're confused throughout the process. And by the time their application comes to me and I request a few items that are missing, the producers are confused and I help them through it. So we're here to help. We can't give you examples of completed applications, but we have many examples in our head. So we'll definitely help.
I mean, with 13 years of experience, you've kind of seen your share of it.
Yeah.
Oh, we have a PSTC question. Okay, well, I think you already covered this, but I guess I want clarification. So you need to spend 1 million in order to qualify for PSTC. So it's actually, there's two different thresholds for the PSTC, correct?
Yes. So if it's a one-off, it's just one production, the minimum cost would be $1 million. If it is a series or a pilot, so you can apply for just a pilot of a series if you're able to prove that that is just a pilot. If the running time for each episode or the pilot is less than 30 minutes, the minimum cost threshold would be 100,000 Canadian dollars. And if the running time is over 30 minutes, the minimum cost threshold would be over $200,000 or $200,000.
Okay. And that's per episode.
Per episode, yes.
And now we have a question about waivers. How many years of waivers need to be filed in order, I guess this is for in case when someone missed their 24-month deadline and they want to be able to apply for the 42-month deadline?
So usually it is 2 waivers. We ask that the waivers are filed anyway, and we communicate with the CRA. So sometimes you file a waiver and actually the waiver was not needed per se, but CRA communicates that with us, but 2 waivers must be filed.
Okay. Okay, another question, it's in the subject. Is a multimedia company definition acceptable for production, or does it need to be specifically video and film?
That's a bit of a vague question, but what I said, I covered this in the presentation, that the production must be primarily in the business of producing film and video productions. If it's a bit hazy, that's why we recommend that you incorporate a one-off in order to avoid being disqualified.
Okay. You mentioned earlier about the having an online approved channel. So we are getting a few questions about that. They all can sort of summarize in this question. Is it possible to apply to add your own online channel to the list of CAVCO approved services list? Or do you need a distributor relationship at arm's length to, I guess, use the to utilize the CAVCO approved service list? So there's a two-part question.
So, like I covered in my presentation, I was trying to load something for a bit more details, but it's not an issue. So the list is available on our website, and we are continuously updating that list. We recommend that you check the list before you submit your application. If your online exhibitor is not on the list, contact us, and we will request a set of information, and then if they are approved, they will be added to that list. So to answer your question, yes, we are continuously updating, and if your online exhibitor is not on there, they can get on there. You just have to contact us first.
And then the second part of the question, you still need a distributor. Does a distributor relationship need to be at arm's length for you to use the online service as to satisfy the 2-year clause?
No, so the Canadian distributor just must be a Canadian distributor. It does not matter what relationship the production company has with the Canadian distribution company, as long as they are a Canadian distribution company.
Okay. So someone has a very generic question, a very general question. I guess we didn't touch upon it in our presentation. He wants to know, what about CoProductions? That's the only question. So maybe generally, I guess they can go to the Telefilm website to find out more information about starting a co-production.
Definitely.
Right.
So when we are presented with a co-production, we cannot put the production through before we receive, at the Part A stage, the preliminary recommendation from Telefilm, and then at the Part B stage, the final recommendation from Telefilm. So yes, my answer would be definitely to consult Telefilm with regards to co-productions.
Okay. If anybody has any more questions, please keep them coming. I think we've addressed most of them. If somebody does want some more clarification on the point about distributor, so here, can you clarify the point about the distributor having to be Canadian? I think this goes before even your 13 years at CAVCO, but we'll see. For example, if the production is Canadian and the online broadcast platform is Canadian, but the distributor that connects the production to the online platform is non-Canadian, would that render the production ineligible for certification?
Yes, most definitely. So a non-Canadian distribution company cannot be used as an intermediary between the production company and the online exhibitor, regardless of whether the online exhibitor is Canadian or not. So production company must be Canadian. Canadian distribution company must be Canadian. The online exhibitor actually can be non-Canadian as long as they are only exhibiting the production and not distributing it. But the Canadian distribution company must absolutely be a Canadian company, otherwise it will disqualify the production.
Okay, we have one last question, and I think this will be a great way to end the presentation. So how can people, so right now we're in pandemic, everybody's working from home, it's hard to get someone on the phone. So what's the best way for someone to talk to somebody at CAVCO? I know we have our email address. Is that the first start to get someone on the phone, or what should someone do if they want to talk?
So definitely send us an email. The emails are being forwarded to analysts or for whomever needs it. So we have our JPOs who go through the emails, our junior program officers who go through the emails, and they will send them to whoever needs to respond. And generally we're very responsive. So yes, please do email us any questions that you have.
Okay, perfect. And actually just one last question. Someone wants to get clarification. In terms of that, earlier we touched upon having the online acceptable service and having a distributor. They want to know if they can be their own distributor and distribute their production using the online channel.
Okay, so they cannot. It's very important to end with this because I've seen this happen. The reason they cannot is because then they would not be a qualified corporation. In order for them to be a qualified corporation, they must be primarily in the business of producing film and television productions. So they can't be 50-50 production and distribution. They have to be a production company, and then the distribution company must also be primarily in the business of distributing. So you definitely need two separate entities for that. A production company cannot self-distribute. This will disqualify the production.
Could a production company have a related distribution company? Like if there's two separate entities, there's a production company and a distributor owned by the same producer.
Yes. So as long as they could be related entities, however, they have to be separate entities. A production company must be incorporated to produce, and then a distribution company must be used for distribution. They can't be owned by the same individual. That is not a problem. Okay.
Well, thank you very much for that. And I think that is our 30 minutes. Thank you very much for all your questions and for the clarification there as well. And thank you, Hiba, for explaining to us the tax credit and taking your time today to answer all these questions. To our audience, once again, there will be some follow-up resources on the CBC CBC Business and Rights website. So there'll be more information there. There's also be contact information, our presentation full of the slides and applicable references to the guidelines with even more information will be there for your reading pleasure. We hope you found today's session useful and that you'll be able to join us again for another CBC or One Stop Business workshop session. Sessions continue each weekday after 2 p.m. or at 2 p.m. Eastern time, assuming there's no technical difficulties, until July 3rd. As Hiba had mentioned, our colleague Katja will be presenting tomorrow. She will be diving into CAVCO's point system and what we consider as assistance. That's 2 p.m. tomorrow. We'll see you there and have a great day. Thanks. Bye.
Thank you. Bye.